As chaos continues to rock the Department of Education, with the new administration attempting to dismantle it and the so-called Department of Government Efficiency accessing sensitive student data, many Americans are on edge, and some borrowers think it could mean their loans will go away if the department is dissolved. We hate to be the bearers of bad news, but dissolving the DOE requires congressional approval. And even if abolished, student loan programs would just move to another federal agency, not end. And to be clear, any potential FERPA violations cannot get your student loans forgiven. With all the uncertainty, it's important to take screenshots of all your studentaid.gov records, download your repayment history, monitor your credit, and consider credit freezes for extra security. Moving on to dispel some other rumors. If you already received student loan forgiveness or had your loans discharged, the new administration cannot force you back into repayment. If you have a letter from the department saying that your loans were forgiven and your balance zero, they can't go back on that, unless you didn't actually qualify for the relief or if it was made in error. Both cases are extremely rare. And in other news, Linda McMahon, President Trump's nominee for Secretary of Education, is scheduled to appear before the Senate Health, Education, Labor, and Pensions Committee today for her confirmation hearing. Speaking of congressional action, GOP lawmakers are expected to use the budget reconciliation process to make major cuts to the federal budget. As a part of this process, they have proposed drastic changes to repayment programs, including merging all income-driven repayment plans into a new single plan, which could increase monthly payments by $200 for the average borrower, according to the Institute for College Access and Success. Additionally, GOP lawmakers are considering various cuts to federal higher education programs, including reductions in funding for new federal direct student loans, Parent Plus loans, and aid programs like Pell Grants. Proposed cuts may also target loan forgiveness and discharge programs such as public service loan forgiveness, borrower defense to repayment, and closed school discharge, as well as benefits like the student loan interest tax deduction and in-school interest subsidies on federal student loans. And finally, the administration has stopped work at the Consumer Financial Protection Bureau. In addition to protecting consumers by enforcing fair practices in financial services like loans, credit, and banking, it has held student loan servicers accountable for mismanaging PSLF applications, stopped illegal servicing practices, and recovered millions in dollars for borrowers who were misled. If you want to safeguard any of these programs, please make your voices heard.